$8 trillion. That's what China just moved. Not over a decade. Not as some slow economic drift. In the last 24 months, China has quietly restructured $8 trillion in assets, reserves, and strategic agreements. To put that in perspective, that's bigger than the entire economy of Germany. Bigger than Japan's. Bigger than every single country in Africa combined. And this move, this massive calculated repositioning, is going to destroy Western markets. Not might, not could, will. Because this exact pattern has played out 3 times before in modern history. And every single time, it ended the same way. Total devastation for the dominant power that didn't see it coming. In the next few minutes, I'm going to walk you through all of it. The 4-stage pattern that's been repeating for over a century. The 3 historical examples that prove it works every time. Where China sits in that pattern right now. And most importantly, the exact timeline you need to understand. Because Western investors who ignore what's coming face the very real possibility of losing everything. Not in some distant future. Soon. Let's start with the pattern itself. Because once you see it, you can't unsee it. Throughout modern history, whenever a rising economic power challenges a dominant one, the conflict follows 4 predictable stages. Every time, no exceptions. The first stage is what economists call dual dependency. 2 powers become deeply intertwined through massive trade. Goods flow back and forth. Money moves freely between them. Both nations get rich. Both believe they need each other. And during this phase, everyone celebrates. Politicians give speeches about how commerce creates peace. Economists write papers arguing that war between these 2 nations is impossible because the financial ties are just too deep. It feels permanent. It feels safe. And that feeling is exactly what makes the next stages so dangerous. The second stage is asymmetric accumulation. This is where the rising power starts quietly building advantages. It stockpiles reserves. It develops alternative systems. It positions itself for independence. Meanwhile, the dominant power grows comfortable, complacent. It takes on more debt. It assumes the relationship will continue forever because, well, why wouldn't it? The shift happens so gradually that by the time anyone notices, it's already too late to reverse. The third stage is strategic repositioning. This is where things get calculated. The rising power begins restructuring its economy, diversifying its partnerships, and building alternatives to the dominant power systems. But here's the critical part. It does all of this while still pretending to cooperate. Smiles at summits, handshakes for the cameras, trade deals that look normal on the surface. Behind the scenes, though, it's preparing for economic war. And then comes the 4th stage, controlled demolition. The rising power takes everything it built during stages 2 and 3, and it uses the dominant power's own dependency as a weapon. It deliberately triggers a collapse. No shots fired, no armies deployed, pure economic destruction. And the dominant power, trapped by its own debt, trapped by supply chains it can no longer control, trapped by a financial system it assumed would protect it forever, simply cannot fight back. That's the pattern, 4 stages. And it has played out with devastating precision 3 times in the last 120 years. Let me show you. The first time was England versus Germany, starting around 1900. At the turn of the 20th century, the British Empire was the undisputed global superpower. It controlled a quarter of the planet. The British pound was the world's reserve currency. London was the center of global finance. Nobody could imagine anything threatening that dominance. Stage 1 played out exactly as the pattern predicts. Britain and Germany traded heavily. Both nations grew wealthier. Political leaders gave speeches about how commerce between their 2 great nations would guarantee eternal peace. The money was too good. The ties were too deep. War was unthinkable. Then stage 2 kicked in. Germany industrialized at a staggering pace. Its economy grew. Its wealth accumulated. But Britain didn't worry because trade was still flowing and profits were still rising. Stage 3 is where it gets chilling. Germany quietly cut its holdings of British pounds by 60%. At the same time, it purchased thousands of tons of gold. It built an alternative trade sphere, forging deep commercial relationships with Russia and other nations outside Britain's orbit. And in private documents that historians later uncovered, German strategists were explicitly planning financial warfare against Britain. All of this happened while the 2 nations were still publicly trading and cooperating. Then came stage 4, 1914. When war broke out, Germany didn't just send troops. It froze British assets. It recalled its gold. It triggered bank runs across the United Kingdom. The Bank of England, the most powerful financial institution on the planet at that time, nearly collapsed. Britain was forced to suspend gold convertibility and went begging to the United States for emergency loans. The British pound's dominance was shattered, and within a generation, the dollar replaced it as the world's reserve currency. The pattern worked perfectly. The second time was America versus Japan, from roughly 1950 to 1990. After World War II, the United States rebuilt Japan's economy. It was a mutually beneficial arrangement. America got access to cheap manufactured goods. Japan got access to American markets and capital. Stage 1, interdependence. Mutual prosperity, everyone winning. Stage 2 unfolded over decades. Japan accumulated over $300 billion in U.S. reserves and treasury bonds. It started buying iconic American assets, Rockefeller Center, major real estate across the country. At the time, people treated these purchases as simple investments. They weren't. They were positioning. Stage 3 arrived with the 1985 Plaza Accord. Japan used its accumulated financial leverage to help engineer a deliberate devaluation of the US dollar. Simultaneously, it built Asian trade networks and promoted yen-based transaction systems, quietly constructing alternatives to American financial dominance. And then came the Stage 4 attempt. October 19, 1987, Black Monday. Coordinated selling, heavily driven by Japanese institutions, crashed the Dow Jones by 22.6% in a single day. The American financial system came within hours of total collapse. The Federal Reserve saved it only by flooding the system with printed money. Japan's attempt at controlled demolition didn't fully succeed that time, but it proved something terrifying. Economic warfare works. A nation with enough leverage can bring a superpower to its knees without ever firing a weapon. The third time was Europe versus Russia, from roughly 2000 to 2022. After the Cold War ended, Europe and Russia struck a grand bargain built on energy. Russia had the oil and gas. Europe needed it. Germany became 65% dependent on Russian energy. Other European nations weren't far behind. And during Stage 1, everyone celebrated. Peace through trade, mutual prosperity. The relationship was supposed to make war impossible. Stage 2 happened methodically. Russia built up $600 billion in reserves. It slashed its dollar exposure. It bought 300% more gold than it had previously held. And critically, it created its own alternative to the SWIFT payment system called SPFS. Russia was building a financial lifeboat while Europe wasn't even checking for leaks. Stage 3 saw Russia restructure its debt, diversify its trade relationships toward Asia and other partners, and systematically prepare for the sanctions it knew would come eventually. Stage 4 arrived in February 2022 with the invasion of Ukraine. The West responded with what it called the most severe sanctions in history. They were supposed to crush Russia's economy within weeks. They failed. The ruble crashed initially, then rebounded stronger than before. Russia survived because it had spent years preparing for exactly this moment. Then it went on offense, strategically cutting gas supplies to Europe. The result was an energy crisis that sent inflation soaring across the continent, pushed multiple European economies toward recession, and forced factories to shut down. Russia had taken Europe's dependency and weaponized it, exactly as the pattern predicts. 3 examples. 3 different centuries, 3 different continents, the same 4-stage pattern every single time. And now, China is running the same playbook. Except this time, it's doing it at a scale the world has never seen. Let's walk through where China sits in the pattern right now. Stage 1 ran from roughly 1990 to 2010. The United States opened its markets to China. China became the world's factory. Trade between the two nations grew into the trillions. Both got rich. Both became deeply interdependent. American consumers got cheap goods. Chinese workers got jobs and rising incomes. It looked like the perfect partnership. Classic Stage 1. Stage 2 ran from about 2010 to 2020. During this decade, China accumulated over $3 trillion in foreign reserves, becoming the largest single creditor to the United States. But it didn't stop there. China launched the Belt and Road Initiative. investing over $1 trillion in infrastructure across more than 150 countries, building trade routes that deliberately bypass Western systems. It created the Asian Infrastructure Investment Bank, a direct competitor to Western-led financial institutions. And it developed the digital yuan, a currency system designed specifically to bypass SWIFT, the Western-controlled payment network that underpins global finance. All of this was Stage 2 accumulation on a scale that dwarfs anything Germany, Japan, or Russia ever achieved. And now we're in Stage 3. It started around 2022, and it's happening right now. This is the $8 trillion restructuring. Let me break down exactly what China has done. It has cut its U.S. Treasury holdings by over $200 billion, bringing them down to under $800 billion. It has increased its official gold reserves by 70%, with official figures showing around 2,000 tons, though multiple intelligence estimates suggest the real number could be over 5,000 tons. It has signed yuan swap agreements with more than 30 countries, including Russia, and brokered deals for Saudi Arabia to sell oil priced in yuan rather than dollars. Its alternative payment system, CIPS, has grown from processing 100 trillion yuan to over 150 trillion yuan. It has been aggressively stockpiling strategic commodities, including oil, critical metals, and food supplies. And in November 2023, Beijing issued a directive ordering state-owned enterprises to divest a combined $8 trillion in Western-linked assets by November 2026. That last point is critical. November 2026. That's not a vague aspiration. That's a deadline. A government-ordered timeline for completing the largest economic repositioning in human history. China is deep in Stage 3. It's doing exactly what Germany did before 1914, exactly what Japan did before 1987, exactly what Russia did before 2022. It's restructuring, diversifying, and building alternatives while still smiling at trade summits and signing agreements that look cooperative on the surface, which brings us to the question everyone should be asking. What does Stage 4 look like when China pulls the trigger? Based on the pattern and the positioning China has already completed, Stage 4 would likely involve 3 simultaneous moves. First, China dumps its remaining $800 billion in U.S. Treasury holdings, not gradually, rapidly. This triggers a bond market crash. Interest rates spike overnight. The Federal Reserve is caught in an impossible dilemma. Print trillions to absorb the bonds and risk hyperinflation, or let rates rise and trigger a depression. There's no good option. Both paths lead to economic devastation. Second, China restricts exports strategically. Right now, China controls between 60 and 90% of global production capacity for critical goods, including semiconductors, pharmaceutical ingredients, and rare earth minerals. A targeted restriction on these exports would create immediate shortages across Western economies. Factories go idle. Pharmacy shelves empty. Technology supply chains collapse. Panic sets in. Third, and this is the finishing move, China offers the world an alternative. Yuan-based trade, CIPs instead of SWIFT, possibly gold-backed transaction systems. Countries that are struggling under the chaos of a dollar crisis and supply chain collapse are offered a lifeline, but it runs through Beijing. Nations don't switch to the yuan because they love China. They switch because they need to survive. The combined effect of these 3 moves ends dollar hegemony, not through military force, through economic warfare. The same controlled demolition the pattern has produced every time, just executed at a scale that makes all previous examples look like rehearsals. Now, I know what some of you are thinking, because there are 3 arguments you hear constantly from mainstream analysts that are supposed to make you feel safe, and all 3 of them are wrong. The first is that mutual dependence prevents conflict. You hear this everywhere. China needs us as much as we need them. They'd never risk it. This is the exact argument British economists made about Germany in 1910, the exact argument American analysts made about Japan in 1985. The exact argument European leaders made about Russia in 2020. History doesn't just suggest that mutual dependence fails to prevent economic warfare. History proves that mutual dependence is what enables it. It's the weapon itself. And China has already built alternatives that reduce its dependency on the West far more than the West has reduced its dependency on China. The second lie is that the dollar is too big to fail. People say this as if it's a law of physics. The dollar can't be replaced. It's too dominant, too entrenched. The British said the same thing about the pound. For over a century, the pound sterling was the undisputed global reserve currency. It was the bedrock of international finance. It was replaced anyway. Dominance isn't permanent, and right now US debt levels are actively eroding global trust in the dollar. Every trillion added to the national debt is another crack in the foundation. The third argument is that the US can respond effectively, that if China makes aggressive moves, America has the tools and the power to counter them. Think about that for a moment. Europe, one of the wealthiest and most technologically advanced regions on the planet, couldn't respond effectively when Russia weaponized energy. The crisis was slow-moving and predictable, and Europe still got caught flat-footed. Now imagine a simultaneous hit to bonds, supply chains, and the currency system itself. The dependencies are too deep. The response time is too slow. By the time Western institutions react, the damage would already be done. Every single comfort blanket that's supposed to make you feel safe about this situation has been proven worthless by history. Everyone. So what do you actually do with this information? Because understanding the pattern is only useful if you act on it. The timeline suggests maximum danger approaching by late 2026, aligned with that Chinese government divestment deadline. Between now and then, there are concrete steps to consider. First, reduce your exposure. Western stocks, bonds, and real estate that are heavily linked to Chinese trade or supply chains carry enormous risk in this scenario. That doesn't mean sell everything tomorrow, but it means honestly evaluating what you hold and understanding which assets are most vulnerable. Second, consider positioning in sectors that benefit from this kind of disruption rather than suffering from it. Defense companies, domestic manufacturing, energy and food security, gold and hard assets. These are the areas that tend to hold value or even appreciate when the kind of economic warfare we're describing plays out. Third, diversify your holdings. Gold has been the safe haven in every single historical example we've discussed. Bitcoin and other decentralized assets offer a hedge against currency disruption. Neutral currencies from countries not directly involved in the US-China dynamic provide another layer of protection. And on a practical level, consider building a personal buffer, 3 to 6 months of essential supplies, particularly medications, electronics, and everyday goods that are currently manufactured in or dependent on China. If export restrictions hit, these items become scarce fast, and having a stockpile isn't paranoia. It's the same basic preparation that people in Eastern Europe wish they'd done before 2022. And if you're wondering whether this is just speculation, look at what the insiders are actually doing with their money. Central banks around the world have been buying gold at record rates while quietly reducing their dollar holdings. Billionaires and family offices have been shifting their portfolios away from traditional Western assets. Hedge funds have been purchasing protection against exactly the kind of market disruption we're describing. The people with the best information and the most to lose are already acting on this pattern. That should tell you something. The cost of ignoring this is severe. Throughout history, the people who lost the most were always the ones who believed stability was permanent. Dutch investors who thought tulip prices could never crash. British savers who thought the pound would reign forever. European manufacturers who thought Russian gas would keep flowing no matter what. They all had one thing in common. They saw the warning signs and chose comfort over action. The pattern doesn't care about hope. It doesn't care about optimism. It responds to math, leverage, and timing. And right now, all three favor China. Here's where we stand. China has moved $8 trillion. The repositioning is nearly complete. Stage 3 is well underway and Stage 4 is approaching. 2026 changes everything. If you found this valuable, subscribe and turn on notifications because in part 2, we're going deep into the specific sectors most likely to collapse, the assets most likely to survive, exact stocks, commodities, and currencies to watch, and a week-by-week timeline of how this could unfold. The collapse of this system is looking increasingly inevitable, but your response to it is entirely optional. You can prepare or you can hope. History has a clear opinion on which one works. Choose wisely.